Hey, guys. What's up? It's your Tuesday call on a Tuesday this week. It's bagged. We've got Nick, Jeff, DI. We've got GP. And, of course, it's our quarterly cookie. Cookie, we've missed you. It's been too damn long.
Yay. Good to be here. Good to see you guys as well. You've not changed a bit.
Well, yeah, for the most part. I got new glasses since last.
Hey, how's your shoulder? Because you had like an injury.
My elbow is great. Look, I can touch my own shoulder. I can touch my arm now. Look at that.
Okay, good.
Look at that.
You're getting old.
I know. I'm great. I'm great, brother. Nick, real quick before we jump on the cookie, I'm gonna pull up the cues because we talked about this last week at length on both the shows, and I'm sure Cookie's gonna get into this. But maybe we have follow through today. I don't know, but props to you for saying this was your likely scenario.
Yeah, I mean, it was in conjunction with. I mean, I had kind of mentioned how shitty the mag names looked, and GP even pointed out like they just need to stop going down. I think with Meta and Microsoft bottoming out, I think it's really. I mean, and Amazon kind of taken off today as well. It's kind of lighting a fire under the Q's ass. But yeah, in the Q's, we kind of went from, we're on week 21 of this range that we're in. And I think once we kind of pushed past about week 12 was kind of like, all right, this thing needs some more time. Because I think initially, when price does start moving sideways, I think, the initial thought is an 8 to 12 week kind of consolidation period before we resume higher. And if we don't get it within that kind of time period, you got to kind of shift gears a little bit. And the Qs kind of went from, a head and shoulders build out to an inverse head and shoulders to an ascending triangle. Like I'd said, Mark Minervini kind of coined that term, the VCP, volatility contraction pattern. And then last week we were kind of talking about how it just looked so fucking pretty and maybe even too pretty. And sure as shit, we kind of took out that pivot low. And I think kind of what this market's been really famous for is kind of the undercut and rally plays where, a pivot gets taken out and, immediately gets reclaimed. And we could probably even point back to us talking about Google, way back when we
last spring,
we kind of had, when we had that nasty sell-off bar. And like when things like that happen and you don't get the follow through, or you don't get the follow through in the action that should come following like a certain, exactly. So, sure as shit, we got the undercut and rally in the Qs, and I think probably what a lot of people are pointing to that aren't too thrilled with where the Qs are is probably the volume. It is a bit light here, but considering the action within this range, it's probably no surprise that the volume isn't heavy. I think
we're human. Don't we always try to find things to complain about and things that aren't perfect? And that's par for the course. I do have to say, Cookie requested this week to be on the show for a specific reason. So I'm gonna turn it over to Cook. Cook, where do you want to take this conversation? What do you want to do? How do you want to do this?
Normally I give it some thought before I come on, but
hell no.
Just come back from vacation and I haven't really done it, but I did request to come on the show this week, and it's because you're talking about the wedgie on the Qs, right? Or the what was the pattern you called it? The ABC TPF? What was it?
Right. Kind of a ascending triangle or a VCP. Okay. I mean, it's kind of like the same thing, really.
And so there's a couple of things, right? I mean, something that GP mentioned probably a month ago about, was it the calendar flip? Like you talk about, like in January, you get change, the things like go nowhere, then suddenly you get a calendar flip. And it's the same again. So it's no coincidence that I'm on at the end of the month. right? So what calendar flips and end of the month have in common is a monthly candle close, right? And so you've got the QQQ wedgie close, you've got the QQQ pattern closing now at the end of the month. And I mean, the market is really confusing, not going to lie, right? You've got metals going through the roof, like not like an average run up, but like a decade. We haven't seen anything like this in years, right? Decades. And you've got crypto looking like shit, like really looking like shit. You've got the Q stuff, and you've got many tech names not doing so well either. You've got small caps which are doing okay. So here's the thing: you've got semiconductors which are doing pretty well. Mega cap tech's not doing so well. Crypto's doing shit, and it's all very confusing, isn't it? It's like a mind fuck.
I mean, it can be, I think, Cookie, if you let it be, right? Like, I've been a semiconductor, as long as you've known me, I've invested in traded semiconductors, right? And as long as semis tend to lead tech, I don't think things are broken.
Yeah, I agree with you. And I think, it comes down to, I mean, from my perspective, it was, we actually foresaw this. Is that the right word? I don't know. We saw it coming. We saw this 3 months. We saw it coming 3 months ago, right? And the reason why we saw it coming 3 months ago. Hey, look, the thing is, before black box warning disclaimer. Whenever I talk like this, I sound like an ass. Like we saw it coming and we knew what was going to happen and all this. So I apologize for that. I'm going to be a complete cock, right? But I'm just going to say what we did and what we saw. Okay, just to explain, and I'll share the charts with you as well. Do you guys remember about 3 months ago? Middle of October, right? QQQ peaked around the 18th. Was it the week of the 18th of October, something like that? And it wasn't just the Qs; it was crypto as well, right? And then everything went sideways, including so crypto went sideways just like big tech did. But the problem with crypto was that you didn't get such a strong run up like some of the tech names. So the crypto bros were very, very brokenhearted, right? They felt they get the consolidation, but they don't get the run up before that. But tech and crypto moved together from the middle of October. There's no difference, right? But then within the markets, you get differences. So for example, let's take AMD versus NVIDIA or AMD versus Broadcom, right? AMD, when it consolidates really nasty. Like it looks like
are you showing? Are you trying to share screen right now? Or are you just talking?
No, I'm not. I'm just waffling. Okay, I'll go to share the charts in a second, right? But the point I'm trying to make is within sectors you'll have certain names which consolidate sideways and others which consolidate in bearish trends. Right? So AMD looked like a disaster, while other mega cap and tech names went sideways. Like Google went sideways for a while. Microsoft went sideways for many weeks as well, and so the point I'm trying to make here is that we tend to think that after long run ups that everything's going to continue to go higher, but they tend to go sideways for a long time, right? And after April, you've got to remember, after April the markets went up like crazy. So the fact that they went sideways from October for 3 months is not surprising. At some point, we were going to pay the price for that move from April, right? And so either the market continues to go up 30% every 3 months, which is impossible. The index ain't going to go up 30% every 3 months, right? So at some point, it's going to go sideways. And so the point I was going to make before when I said I sound like an ass is that wedgie that you see in the Qs. We've seen it 4 times already since the COVID lows. At least 4 times. The summer of 2023 was the same wedgie,
where it like spikes a low and then kind of starts to put in.
I'll show you the chart. I'll show you the chart. So I'll share my screen and I'll show you the chart.
Yes.
And so that's why just before the call started, I said to you very crass. I said, I can tell you exactly when it's going to start. I can tell you exactly when it's going to end and what's going to come next. Now, I'm saying that on the assumption that the pattern continues to repeat.
Sure.
So my going in position is there's a pattern that's playing out in the market and it repeats over and over again. And because it's done so for 3 or 4 times, it's likely to do it again. And it allows me to give you an estimate for when the market is going to top. Right? And I'll show you the charts in a second, but just before I do that, Last time I was on, we were talking about the potential correction in Q1. Remember that? Right, and the market started wobbling last week or the week before, and we thought maybe this is the correction that Cook was talking about. I don't think we're not gonna get it. It's too early, right? And I'll give you the date now, and then I'll share the chart. Right, so the market is going to continue to go up until the week of the 30th of March.
Almost to the day, same time last year.
Well, possibly, yeah. But it's because of the pattern. I'll share that with you in a second, right? So next time I'm on, which could be in 2 months from now, get me on the call the week of 30th of March. So the week of 30th of March, I think the market is going to top. Right? And between now and then, it's going to run like fucking crazy.
Yes.
Right?
Yeah.
So let me say it. Let me say it because we need to say it on every call. You're not fucking bullish enough.
Yeah. Gosh, music to my ears.
So Nick, your beard is very pretty, but you're not bullish enough. And GP, your background is fucking crazy, but you're not fucking bullish enough.
I got a halo. I got a halo.
You got the halo, right?
But am I the only one bullish enough?
Huh?
Am I the only one that's bullish enough?
You're the only one. Because I've listened to a couple of your podcasts, and you pull through for the team.
All right.
Right. But hey,
somebody get this. Clip this right here.
So one question for you, Cookie. Does that bullishness actually include Tesla or not? Because it does not usually.
Well, fuck, I don't know that. We'll check. You remember what I said last time with Tesla? I said you can't fit any more candles in that, and then they fit in 1 or 2 more candles, monthly candles like that, right to the 9-monthly moving average. But okay, right. So I'm going to share a couple of charts, right now. These are charts that I have shared in the past. So none of these charts are new. Right?
They never are.
They never. I was using them for years, right? I just keep adding to them. So share screen. So if I mess this up, excuse me, because it's the first time
I've got you. If you mess it up, I got you.
All right, let me do that.
Is March 30th? Monday, Black Monday. It's a Black Monday.
We gotta have them on the 31st.
All right.
Right. So got it. Right. So hopefully you should be able to see my chart. Right. You see my screen?
Yep.
Well, that was good.
Fused up there.
Okay, we're good. Right, so I did have a couple of charts open before, but I'm gonna have to just open them again. Right now, you're gonna have a heart attack when you see this. So I'm warning you, right? It's a bit wild. There's lots of shapes and shit on it. And
my body is ready.
All sorts of colors and stuff as well, and so you're gonna have to excuse that.
We look paste these out.
We look at every day, so we're used to it. But if you have like a heart condition, then I warn you. All right. So
trigger warning.
Right. So this is, forget what it said. Hold on, just wait. I'll zoom in a second, right? Don't worry about that. Next to it, I'll just pull that up. Anyway, right. So this is the wedge in yellow, the yellow one. Right. It's good with the colors, actually. Right? So this is the wedge that you saw. I added that wedge to the chart here this week, that I'm pointing at.
Sure.
Isn't that fucking crazy? Aren't you guys impressed?
I am.
Good.
Yeah.
So
I am.
Literally, I added that wedge to the chart that week, and with that, it gave me when the market would top. It gave me the two, and then using other shapes and stuff that I've got.
When you say, let me just back up real quick though. Like when you say top, do you mean like
local
like
top?
A what?
A local top.
Intermediary top. Yeah.
A what?
A short-term top.
A short-term top. Okay.
Okay. Yeah. I mean, I'm not talking like a bear market, like we're going into a bear market, but
like a 20, like we're not going, like not a 2022 kind of thing.
No, like what we got now.
All right. Okay.
Right. So the 3 months of bullshit following that.
I want to ask you a question, Cookie.
Go for
especially when you say things like top, right? So that's what you're expecting, right? So the results is what you want to play. So if you could take like a minute or two on how you kind of, when you get there, how do you assess stuff? Do you trim stuff out? Do you go short? Like how do you just a thought process, right? You're saying it's going to be a top.
So So this comes back to tactically how we trade patterns and trends, right? So what I will always do is I will always take partial profits at a weekly or a monthly pivot, right? So so this is part of the rules, right? Always take partial profits at a weekly and a monthly pivot. So a weekly and a monthly pivot basically means on a weekly and a monthly chart, the boundaries on any of these shapes are so for example, here, this is a weekly pivot because it sits on the boundary of any of the shapes on this weekly chart. So we'll always take partial profits there, always, right? So like a robot, and then we assess how the trend evolves given the pullback that we're expecting as resistance there. Meaning that should the resistance give rise to a pullback which doesn't change the trend, we don't exit. Why would you exit if the trend continues going higher? So here the idea is you are assuming that the patterns are going to give rise to a trend change, but you still want to see the trend change to happen before you actually completely exit. Right. So what I'm always doing is I'm always taking profits at these weekly and monthly levels, and then we're looking to buy back as close to the bottom end of the range as we can get. Right. But anyway, look, let's save that discussion for maybe a different call. But I'll answer as best as I can on some of these things if you want. Is that okay?
No, it was just a quick.
Does that make sense for you? Does that make sense, right?
Yeah, it's how I trade it too. But
right. Okay. Good. So in other words, it's like a a flag that the trend could change here. We want to take advantage of any volatility we could get there, but then clearly we want to see the trend actually change before we start completely reducing positions, right? Now, as far as this wedge is concerned, as I mentioned before, we've seen it before. Look here. So I'll just go across the chart. We've seen it over and over again. And some of you might remember, well, I'm sure you guys remember because I know you do your homework, right? The discussions about yen carry trade and bubble mania and stuff. So I'll label these things on the chart, right? So at the time, as the market was pulling back here, so this is in October, as the market began pulling back there was a choice here. Either it pulls back and it resembles something like what happened in April, or something shallower, right? So what we did was said, well, start off with a shallower version first, and you can see if I just scroll back, it's identical. So now you look across like financial media, and so you got some people saying it's really uncanny how this market has moved just like September 2024.
Holy shit!
And dude, we saw that possibility in this period here. So we were planning for some sort of a pullback from the middle of October that could be either like what we happened in April or yen carry trade 2024. And you can see the way the colors are. It's exactly the same. It's the same double pullback. It's the same thing from the top. So now where it says, so this is why I said, this is why I wanted to be on the podcast this week, because this is the week we thought that we'd break out of the wedge. And we did. This week we broke out of the wedge. And this is despite all the bullshit over the weekend. Holy shit, Greenland was going to get invaded. The penguins were going to get fired. I mean, it was a nightmare, right? Remember what happened on Saturday, Sunday? It was a disaster. You go and stop. And with that,
I wasn't even paying attention.
And then we still broke out.
Dude, we're in the middle of civil war.
Right.
Wait, what?
Civil war, you're right. So what's going on in Minnesota? What's going on in Greenland and the EU and Davos and everyone shouting and screaming at each other, right? And so here's the thing, right? Coming into this week, we were prepared for the possibility that those catalysts derail the pattern, because we can't discount that a catalyst sufficiently strong enough will derail the plan, right? So we prepared for that. So, but also just to highlight, you see these small black ellipses, right? So there's a small black ellipse here, right? So this is how prices moved as we left that wedge last time. So going back to what I think, was it GP you said, or maybe it was Nick? I hope we just go up from here. Well, maybe we don't. Maybe we get 2 or 3 weeks of bullshit as this new wedge opens up and the price action is contained inside this space here. Now, the good thing is, on the positive side, the good thing is, even with that, we still get to the top of that wedge, right? So my estimate for the next 3 months is, and I'll give you the caveats, right? My estimate is that QQQ will get to 675 the week of the 30th of March, even with 3 weeks of bullshit on the way. Now, notice where the market stalled today. 631.3 is my pivot. We got as high as 631.82, and we're at 631.31 right now. 631.30 is the top of that wedge.
Yeah, and man,
that's not fucking random.
No, for sure.
That's not accidental. That's not because of the news or because buyers turned up or because sellers turned up and all of a sudden everybody wants to buy fucking Apple. It's not. It's rigged. The thing is, I'm able to share with you. So the thing, most people, 99% of the people will say the market is rigged and then just wave their hands in the air and give up. But what I'm sharing with you is how and why it's rigged. Well, maybe not why, but how it's rigged.
Yeah.
Right. Now, I mean, and the thing is, notice this candle, how it opens, right? So the low of the week sits on the wedge, just like it did in 2024.
Are you familiar with golden ratios?
Oh yeah, I am, but I don't use them. But I
mean, it's you kind of are. You know, just like if you could pick apart any chart, probably the bigger the better. You know, like between like mag and Qs and whatnot. But like, you can just measure out legs, right? And like, let's say, because it's kind of what you're pointing to, where you measure a leg from like a kind of a low to a consolidation period. And like, let's just say Google runs on average like 89 to, let's say Google runs about 35 points and then it goes into a range. Runs another 35 points, runs into a range.
Yeah.
Like the golden ratio for Google then would be 35 points. So you can kind of just guesstimate that anytime Google starts to go on a run, it's going to be in about a 35 point run.
Yeah.
So like kind of what it's telling you is like, okay, if you measure that out and you're getting involved in the trend and it's like 10 points into that run or 20 points into that run, you know, you've only got about 10, 15 points left before you really got to start taking money off the table, because you're kind of pushing towards the end of that golden ratio where price is going to start to move into a consolidation form. It's kind of very similar to what you're, I mean, it's very similar to what you're explaining. I think
I love what you said. Let me just paraphrase the methodology I use for charting, right? And it's basically paraphrasing what you just said, and that's, I am looking for uniform volatile ranges.
Yeah. Okay.
I'm looking for uniformity and volatility. I'm looking for, as you said, price is likely to move a certain amount and then stall.
Yeah.
Like the example you just said with Google, right? It moves 30 points, then it stops, right? And it's true, it does that. They do that, right? And because that's what I've used then to come up with. So from this chart, I've got 30th of March, right? And then a different chart I'm going to just share with you as well. Or let me just share the caveats first, right? So how could this fall apart? Right? What might go wrong here that stops this playing out? It goes below the ellipse, goes below that 20-weekly moving average, goes below 607. So let's say, for example, this week, because of earnings or because of the Fed, FOMC, that all hell breaks loose. Or something happens in Europe and they fine all the big tech companies and shit, right? Then, so long as this holds, ideally it holds the breakout of the wedge, but it's okay so long as it holds down to the 20-weekly moving average. If we go back below the 20-weekly moving average, I think then we get the correction that I foresee to happen in March. So there could be some sort of catalyst that brings forward that correction, right? But notwithstanding that, price is likely to move in the same way in this space as it did back in 2024, and notice this, right? Look at this shit show here. Look at this shit. mean, look at this shit show here. I mean, look at that. I mean, this insane candle. I mean, you haven't had a candle like this. You haven't had a candle like this in weeks. I mean, this is unusual. This is unusual. And then it just gives it all back. I mean, in the end, it's a technical back test. It's a back test of a breakout, but it's a shit show nonetheless, right? So we will get shit like that. We will get rubbish like that, because if there's one thing that you guys have noticed is that any excuse for a back test, any excuse for a retest, any excuse for a double bottom, the algos will take it. Right. So that's why sometimes you'll say, we can't trust the breakouts. Well, no, you can. You can trust the breakouts, but you got to trust the back test too. Right. So if
you can trust the breakouts. If they're not working, they're not working.
Well, no. What I mean is that the breakouts potentially, there's probably a reason why those breakouts didn't hold, because maybe they weren't breakouts to begin with. Sure, and what I mean by that is there was maybe a different resistance point just above that was the true breakout, and we never crossed it. Right. So it's all about hierarchies in support and resistance, right? And sometimes you'll find, so for example, right, you'll find, let's imagine that you think the breakout's along this wedge, but price stalls at the ellipse. So that is a breakout of the wedge, but it hasn't broken out of the ellipse. And maybe the ellipse is more important. And then price comes back down and you think, fuck, that breakout didn't work, but it did work. It stalled at the next important level, right? So unless you've got what potentially could come next, then you're not going to see things like that. But there's other tricks as well with how moving averages move, approaching breakouts and stuff, which can give clues to whether breakouts hold or not as well. One day I'm going to come on and I'm going to share a fuck ton of these rules and ideas, insights into how prices actually, just a discussion on price action.
What are you doing Tuesday next week?
No, I can't, because I'm doing a session with my group, but it's incredibly fun, right? It's incredible. Let me give you one. I'll give you one, right? And it has predictive powers. Right, so write it down. If price gives a lower candle low, it's likely to go to the 9 MA. Right. So for example, right, let me give you an example.
Weekly?
Clip that.
Any time frame. On the 1 hour, on the 5 minute, it doesn't make any difference, right? So you've got higher weekly, you've got higher candle lows here. As soon as you take out this candle low, price gravitates towards the 9 MA.
Okay.
So then you start again. So you start again, higher lows, lower candle low, price goes nowhere until the 9 MA arrives. So what a lower candle low signals is the potential of a dip to the 9 MA or consolidation until the 9 MA arrives. And it works on any time frame, and it works in bearish and bullish trends. For bearish trends, you just got to stand on your head. It's the reverse of that. I'll let you work it out. I'll let you work out what the rule is for that. But it works. So then you start saying, well, with that simple rule, you can then start managing expectations of how you think prices are going to move given what price has just done. So for example, over here, right, you've got what looks like a breakout, but as soon as price takes out this low, it goes to the 9 MA. Well, what a surprise. Well, no, it wasn't a surprise, because that's what it does. So then you start saying, right, this is where I'm going to stop FOMOing in. I'm going to wait for the 9 MA to arrive, or I'm going to buy the dip if it goes there. Write it down. You can use that on any time frame, any instrument, any time frame, any day of the week, crypto, shit, everything. Every fucking thing works.
Love it.
That's not random.
No.
Why does price do that? So you observe all this shit happening in the market and you say, yeah, the market is rigged. Yeah, it's fucking rigged. And then you say, well, how is it rigged? How is it rigged? And you start observing and you start saying, right, this is how it's rigged. I'm going to observe that, back test it. Does it work? Yeah, it fucking works. That becomes one of my rules in my toolbox.
Yeah.
So now you've got a rule that helps you understand how trends evolve over time. Weakness in the trend. Lower candle low gives rise to weakness in the trend, which ultimately sees the 9 MA. So you look at what happened with United Healthcare or anything else, like, shit, it fucking starts putting in lower candle lows, it goes to the 9 MA. Or whatever, maybe the other way around, right? That one tanked to the...
In United Health's case, it rejected the 9 MA all the way up, right?
Yeah. Right. So anyway, okay. So let's park this for a second, right? I want to go to a different idea, and then we can take a look at crypto if you want later as well. So let's take a look at QQQ monthly. Which one is it? This one. Nah, this one again. You're gonna, again, pacemakers. Like, I apologize if anybody's gonna have a hard time looking at all these different. I mean, this one's not as bad. It's not as colorful, right? But again, this is a chart which I shared with you 2.5 years ago, which we were here basically the bear market, and then I just added shit around it right now. So this is going back to what Nick said, right? How can I draw? Let me see if I can draw on this, because I need to draw. I need to doodle stuff this way. Give me a sec. Here we go. This one might work. Right. Okay. Good. And I'll make it a bit fatter. Fat. Okay, good. Now, so here you see a bunch of different downtrend channels, all these downtrend channels, right? And then you look closely and you notice at every intersection, look, future correction, 2026. Yeah. At every intersection, the market wobbles. So it goes back to what Nick was saying earlier about the market moves a certain amount, but it's not just about a certain amount. It's about a certain amount in a certain time, right? Because here the forecast then is that whenever we hit this downtrend line, the market will stall. We can either go vertical and have a blow off top, or we can work our way slightly like that, and then we'll stall there, and then we'll pull back. Lines up with this period around April, May of this year again.
It's almost like the slower the 2022, for instance, or even kind of like the 2018 to 2019 kind of sideways. It's like the slower it moves, the more likely it is to remain kind of contained within like and I don't know how I'm trying to say this. It's almost as if like the slower it moves, the more likely it's to correct through time rather than price. For like 2022, for instance. Mm-hmm. Like I remember on the pod, like we were perpetually talking about how even to the downside, the follow through was fucking horseshit. It just kind of like it would undercut the lows and then kind of like undercut the lows on a large enough time frame. It should lead you to believe that where it's going to ultimately find support is in a relatively shallow area. So, for instance, like the Qs ended up holding like the 265, which was like the 4-year MA, right? And like we should have really been anticipating that in a more like a better manner, I think. Just in nature, considering the nature of that correction, whereas like if it was like crazy violent and you were seeing a lot of follow through, you might say, okay, well, 267s. Actually, I probably remember hearing GP say this. Like, if there was more violent follow through, you might say, okay, well, price is going to continue to the downside, and maybe Qs hold like 188, 200. So you can probably kind of guesstimate what area of support it's going to hold based on kind of that. The behavior within that kind of correction as it starts. Am I making any sense? I don't know. It makes sense in my head.
I hear what you're saying. You're thinking that like the speed in which price arrives at a certain destination could affect its outcome, how long it stays there or how it moves from there, right?
Right.
Maybe that's to do with momentum, right? Because if you arrive somewhere with high RSI, then chances are you get thrashed a little bit more than if RSI is just around 60 or something. But like you because that's how you get blow off tops, where RSI is like 18, like 90, 95. And then when RSI pulls back from 95, price just craters. It's different from RSI, the price pulling back when RSI is like 50 or 60. Could be that. Definitely could be that. Should we continue?
Yes, sorry, I didn't mean to. Yeah.
Okay, no, it's fine. And please do, because I can talk for hours on this. But so as far as the market's concerned, right? And let me just say one other thing as well, something we touched upon I think on a previous call as well, was that people talk about how fast this market is going. I don't think it's going very fast at all. Right? I mean, if you look across this chart, it's the same gradient. All the uptrends have the same slope. This goes back to 2017. I mean, you could probably go back further, right? So if you look over here, look at that. Look at that. It's all along the same trend line. So you've got the corrections, you've got the bear market, but then it's all along the same trend line, even now. So this idea that the market is like an overdrive and bubble, and I call bullshit. I call absolute bullshit. We've gone nowhere for 3 months. We've gone nowhere for 4 months, right, since October, in the case of the Qs, for example, right? But this is what the market does. This is what the Qs do. This is what tech does. So when Microsoft goes nowhere for 4 months, when Facebook goes nowhere for, well, because they went up 150% before they went nowhere for 4 months. You can't just forget that. You can't just ignore the fact that they went up like bonkers since 2023. Right, and then they're going to go sideways. That's normal, right? And so, the only thing that we don't want is that the sideways morphs into a bear market. So that sideways here morphs into a bear market, and it could, in theory, it could. And then you start saying, well, okay, then you start marrying the fundamentals and the macro that's going on outside the charts, and you say, well, how likely is it, or does it make sense for the market to turn into to morph into a bear market now? And the answer is, fuck no, it makes no sense at all. 0 sense. Could it happen? It could, but it would have to find a reason why. I mean, maybe all of a sudden they can't start, companies can't sell, the earnings growth peaks, which could be a reason. Earning growth peaks could be a reason. So it's not that they sell less, it's just that they don't grow as quickly. And that could be a reason for the markets to start stalling. They say, well, okay, well, if you're not growing any faster, then we're not going to markets not going to go up. So that could be one reason, but failing that, but then you say, well, how realistic is that? And then we go back to what we talked about, the $10 trillion question, and maybe it was 100 trillion last time I was on, and that was, we're at the beginning of this. All we've seen are LLMs. Right? Since ChatGPT, all we've seen are LLMs, right? So we haven't had anything yet, like agents and humanoid robots and embodied AI, as they call it. We haven't had any of that, and that's going to be real transformative.
Maybe I'm putting the cart before the horse. Maybe I'm just trying to future cast here a little bit. But March 30th, potential top, right? Mm-hmm. According to do you see this as more sideways, or do you see this as a short-term bear market?
Short-term bear market. I think it's going to be different to what we saw in April last year.
So closer to 2022 than, 2023 rather than what we saw in April.
Okay, let me just pull up the chart again clean so I don't have it drawn over. Just 1 second. I'll give you an example of what it might look like.
That's exactly what MBG was calling and what I had kind of pointed to prior to the show.
So let me give an example of what. Okay, so first off, it's likely that the pullback is going to be similar to one of these. So let's circle like some candidates, right? So I can give examples of the type of pullback that we're looking at here, right? So, so I would say, so this obviously you've got the bear market there. This is again at the same boundary. This is at the same band. This is April, right? So you've got these three. So this is the summer of 23, right? So the summer of 23 was quite painful. I think the summer of 23 was worse than the April of 25.
I think you're absolutely right, because it was so much long and drawn out.
It was long and drawn out. It was horrible. It was horrible. It was disgusting, right? So I mean,
what happened last year was over within a month,
right? And that's why it wasn't as bad, right? So I think we're going to get something like this. We'll get something like the summer of 23, and I think the pullback will be. It could be as steep. It could be as deep as that, but it will last as long as this. So I think we could get a 15% to 20% pullback.
Basically right back to where we're at currently.
Exactly, yeah. We're a round trip. But now, remember what we said? Remember what I said on the call last time? when we looked at XBI and I said, we'll round trip. I said exactly that. That was 3 months ago when I was on. And I said in Q, so the correction is going to look like round tripping the move that we get. So again, just to recap what we talked about like 3 months ago, which was we are here, we get this blow off move into Q1, and then we come all the way back, and then we go to the moon. So we get to 670 in the Qs, we come all the way back to 620, right? And then we launch from there. This period will last 3 months, and then we go higher from there. So I guess the only difference between being on now and being on 3 months ago is maybe it's a little bit more detailed, a little bit more specific, right? And there I'm putting my nuts on the line because I could be wrong. Absolutely. I mean, with any forecast, right? I'm destined to be wrong and go up in flames and stuff. But here, what I'm doing is I am just interpreting the patterns that we've seen in the past and assuming they will continue to play out in the future. So there's no judgment call. There's just, this is what the patterns show. This is what's possible. Whether it plays out or not, ultimately we'll trade what we see. And I always say that to my group. This is what the patterns show, but we trade what we see. And this is the weird thing. They almost always work out. And the sad thing is that even when they almost always work out, we don't make a fuck ton of money. You know why? Because you get scared out of positions.
Yep. They try to divorce you from your shares.
Absolutely, right? So even though you have this master plan and this is going to happen and that's going to happen, it's still incredibly hard to hold on to those positions when the market does what it does. And so one way of addressing that is, and we talked about this on the previous call as well, which was focus on monthly timeframes. Don't use the dailies and even the weeklies, but focus on the monthlies. And I remember saying that as long as we hold monthly lows, you buy the dip. Remember when we talked about Micron, for example, right? And I remember, so Micron was at 220 at the time. It's at 400 now. Along the way, it gave dips. It went up to 250, then it went back down to 190, but it held higher monthly lows. So the only way you were going to hold on to Micron between when I was last on and now was if you respected it held high monthly lows, because as I said 15, 20 minutes ago, as long as you hold higher candle lows, we avoid the trip to the 9MA. As soon as you lose a candle low, chances are you'll go sideways or down to the 9.
I like it.
Right? So here, for example, take a look at what's going on with the Qs the last 3 or 4 months, right? So you get this pullback at the center. So I didn't mention this before. Can I erase this? How can I? Let me just see if there's an erase button on it. Well, I can just undo, right?
Yeah, I think it's undo.
Get rid of some of these doodles. Okay, they've all gone. Excellent, that worked. So over here, for example, right? So you talked about the most significant pullbacks at the boundaries, but then you got these mini pullbacks at the center lines. You get these mini pullbacks at these halfway points, right? And the reason why that works is because price is symmetrical. So you get the big pullbacks at the boundaries, and you get, well, actually, this one's quite big. That one's quite big. But then you get these other pullbacks, along the way as well, right? So we get that. So we get that 3 months ago. Price comes down. It stalls at that downtrend line. Looks like a back test, and then we continue going higher. We make higher monthly lows now. So just by $1 or $2, we held higher monthly lows, and we don't go to the 9MA, right? So as long as we keep doing that, right? So the low of this month is 607. Right. So 607 is the low of this month. So in February, you trade long versus 607. That easy, right? So if you want to really eliminate all noise, start with a monthly chart, trade high and monthly lows. You'll clean up, right? Easier said than done, because the thing is, we want noise. We want more noise. We want more data points. We want shorter time frames. We want to read the newspapers. We want to find out what's going on everywhere, and that affects our trading behavior, doesn't it? Right? But ultimately, you can simplify it if you live in a black box and only use a monthly time frame. You can do that. Not many of us are equipped to do that, but that's the only. I think that's like one of the only ways. I mean, the market is getting harder and harder because it's all driven by AI. the markets are driven by AI, right? The algos and everything, right? So and that's why sometimes you think the technical analysis doesn't work. It does work. It continues to work. But every possibility for a back test and a retest, I think, is taken. And so it's more technical than ever. I think it's more technical than ever. I don't think the technical ever stop working.
Yeah. That I think we've talked about that as well, Cookie, on our regular show, which is it's annoying, but it's really technical. It's horizontal pivots. It's not necessarily trend lines or anything, but it's the back test of the back test of the back test, and then eventually it will go. But it's just continuing to back test every move. But it's literally holding to the penny.
It is.
A lot of these pivots.
It is. It's so machine driven, but you either love it or you hate it, right? I mean, I don't know, you got to just. But a little bit of both, right? Yeah, it can be very annoying. Don't get me wrong; it can get really annoying. But I say to my guys, check into a monastery. You just got to like zone out. You got to try and avoid that frustration, but it's not easy.
We got about 15 or 20 minutes left, Cook. So I want to be very cognizant of your time, as always. I know you want to talk about crypto. I know we've talked about Tesla a lot of times in the past. You play Soxel as far as semiconductors. I'm just trying to foreshadow where we might be going next off of the Qs.
Well, I've just shared that on the Qs, right?
Yep.
So you want to talk? So okay, look.
Yeah. I'm saying move forward. We've you've gone over the Qs. Let's go where you want to take us next.
Okay, look. What I'll do is I'll share a quick chart of Soxel, which I didn't do last time, and I'm going to share it to whet your appetite as to what's still to come. Because what I said last time was that Micron has only just begun, even though it moved up 200%, and it doubled again from 200 to 400.
Yep.
And I still stand by that. And I want to show you Micron within this, let's say, within the framework of Soxel, right? So looking at all semiconductors, and I think Micron's actually 4% of Soxel, if I'm not mistaken, right?
About that, yeah.
Let's take a look at the Soxel monthly chart.
At the pace it's moving, it's going to be larger.
Yeah, you're right. Let's get this up now. So again, this is one where you're going to need to take medication after you've seen this chart. But let me just zoom out a little bit, and you're going to be shocked, stunned, right? Here's where it's going. Right, so this is another cycle in Soxel, right? Now I think Nick a couple of months ago did share a chart showing Soxel at 300, didn't you?
The measured move.
Yeah, something like that.
Yeah,
you're not wrong. I don't think you're wrong. I think it's going to go there. I think it'll even blow past it. So we're repeating this cycle. So we've got these yellow diamonds. So what's happened over the last, this is since 2019, right? So since 2019, Soxel has done this. It's an absolute nightmare, up and down, up and down, up and down. But it only breaks out at 51. It's just broken out. Yeah. So we are literally at the beginning of the breakout of these yellow diamonds. Right now, going back to what I said earlier, that people are talking about bubbles and this is ending, and I say we've only just begun. We haven't seen the humanoid robots, haven't seen all of that stuff. This chart would back that up, right? Where the journey is still. We've just broken out of these highs from 2021. Okay, so the breakout happens around this area here, which is what 51, 52, and so. What I'm looking for here, and this is similar to the discussion that we just had on QQQ, buy higher monthly lows, right? So here, let's another example of that rule that I shared with you a couple of times, right? You buy the higher monthly low, you take out the previous monthly low, you go to the 9MA. Higher monthly lows, you start again, you take out that previous monthly low, you go to the 9MA. And then you do it again. And sometimes it might last 3 months, sometimes it might last 6 months, but that's what you do. Program that into your heads, and you'll take advantage of some of the stronger runs while not getting caught up with the volatility. So here, for example, this is a shitty uptrend, but it always holds always holds higher monthly lows, and it doesn't get to the 9MA for that reason. Once it does put in a lower monthly low, it does start going sideways.
I think I shared this with you, Cookie.
Mm-hmm.
There was a guy on StockTwits years ago. His handle was Trader Fox. And this kind of like points directly to what you're talking about. He was a hardcore trend trader, and he trail stopped every one of his positions by a 6 week, basically a 6 candle low on the weekly.
Okay.
Which is pretty close to what you're talking about in terms of like, if you're holding the monthly low, you're kind of within that time frame, whether it's 4 weeks or 6 weeks. I just thought it was kind of fascinating.
That's true.
At the time, I thought the dude was nuts, but it's kind of stuck with me.
But it works. It's cool.
Yeah.
I mean, you're right. For a month, it's 4 weeks, or let's say 6 weeks, right? But it'll work on any time frame. So you can say, well, yeah. I mean, if you're using a weekly candle, then it's the weekly lows, prior weekly lows and stuff. But it depends how many signals you want. It depends how often you want to trade in the end.
Yeah.
Right? Like the shorter the time frame, the more signals you'll get. Right? The more noise you'll get in that trend. But okay, so that's I just wanted to share that with you. So so the current monthly low is 45. Right? Now the thing with Soxal is, and this is good for those who are thinking about buying this, is it does retrace half the monthly candle almost systematically. So in the month of February, it's likely to go back and retrace half of the January candle. That's what Soxal does, right? And so once you start recognizing and understanding that, then it's like, well, cool. I'm going to sell, especially so whenever you get a strong month, there's zero fear and there's zero FOMO in taking off some of that position, because you're likely to get some sort of a retracement in the following month. And so some trends are cleaner than others. Sox are a little bit dirty. It does that half a month retrace almost all the time. Right? So there's a little tip for you on how to manage that. And within Soxal, then you might find individual names might do the same as well. So for example, we bought, when I was last on, Micron was at 240. I had a limit order at 195 and it filled. That was half retracement of that monthly candle that in October, whenever I was on that time. And it was the low. And then from 195, it went to 400. Shit. I mean, well, great. but it just goes to show, right? So, I mean, the way to beat the algos is you got to become an algo.
Yeah.
You got to trade like an algo. You got to have rules, and you got to have this is based on price action, right? And I think otherwise you get scared out of positions. Anyway, let's move on, right? So let's talk about crypto now. Crypto has been an absolute whore, right? And no offense to any whores on the call, right? Because there might be a few.
Hey, cheers to them too.
Yeah, cheers to them too, right? Nick, we need to talk. We want to talk about something there, or what? You want? No, okay. So let's talk about crypto right now. So the discussion is, are we going to enter a bear market in crypto right now? What do you guys think? Before I share what I think.
No.
Okay, so you think no because you're loaded to the tits on crypto,
I think
right?
there's a chance at low 60s.
Okay, right. Okay, so he's saying yes.
Yeah.
Right. His bullish as fuck.
I think the way that I learned from you always give your base case, right? And then you always give probabilities of other scenarios.
Correct.
So I'm not saying no as a 0% chance. I'm just saying it's not my base case.
Okay, but why? Why isn't it your base case? What's the rationale you're using?
Because I'm loaded to the tits.
Yeah, okay, there you go. That's what I thought. But okay, so I'm going to explain why I think it's not right. So let me see if I can get the words out right. Right, let me do that. Let's start with Ethereum. No, let's start with Bitcoin.
I can give you a legitimate answer, but I would rather hear yours.
Yeah, well, why don't you do that whilst I'm tapping it out?
So my legitimate answer is if everything else is moving, especially technology, in the way in which I foresee and you are describing, there is literally no way that we are in a risk-off environment that should hold cryptocurrencies down. If anything, they should be exploding exponentially higher in same time frame.
Right.
All right, I got a theory as well.
Go for it.
To go along with it. The first leader out of the bear market of 2022 was Bitcoin, and then soon followed by the Qs, and now small caps are joining the party. Bitcoin has been the leader along with crypto in general, and everything's just been playing catch up. And while crypto goes sideways, next leg higher is crypto because it leads, it doesn't follow.
Okay.
And so
Yeah.
I don't think we're in a bear market. I think we're in a consolidative position from the last 3 years of crushing everyone to the upside.
Well, you could say crypto has been in a bear market, right?
It's in a downtrend. I wouldn't say bear market. That's me. It's apathetic, right? Right now there's just no love. It's going sideways, up and down in whatever trading range.
Okay. Nick,
it's trying to take your sats, Cookie. It's trying to take your sats.
Yeah, I think it is getting ready to touch the low 60s. And the reason I say that is just being that we have a long-term trend line there. The 4-year moving average is also sitting right there in the 60s.
Mm-hmm.
We've already taken out the long-term on my monthlies. I have the 12 and the 18-month moving average, so it's like, the year and then a year and a half and then the 4-year, so 48 month. And when price goes into a range, I've kind of spoken to in the past, I generally think that price moves in about 5 legs within a channel or pattern is kind of with the 5th touch being the spike low before it catapults into one direction or the other.
Mm-hmm.
And so I think the 5th touch needs to happen. I mean, it could be not quite as low as this, like mid 60s. It could probably bottom out at like 74, 75. But I do think we're going to head lower here. I think in a weird conspiracy theory way, not a conspiracy theory, but like the fact that Bitcoin has gone kind of mainstream and hasn't gone anywhere leads me to believe that they need to accumulate even more, and they're not going to accumulate on the way up. So I think they're gonna, I don't know, spike this one more time lower.
Okay. I mean, just on what you said, the 50 monthly moving average is around 60K, and typically that's where Bitcoin has gone to in bear markets. Right. So there's that reference point as well in case shit hits the fan and we go there, right? But so I'll share some thoughts, and what I've said to the guys that I trade with is it's a long shot because, well, I'm holding out that crypto is going to go higher from here, but the charts look like shit. So we've got to be open to the possibility that we don't get what we want and that the market does head lower, right? So what I've tried to do is I've tried to come up with reasonable, logical rationale for why the market might not go down, right? And I want to just share those with you, right? So let's go through a couple of them, right? So first of all, I've got marked on here. So this chart, I shared this a couple of years ago, and I think it was one of the first that highlighted the highs in 2017, the highs in 2021, the highs in 2025, all sit on the same trend line, right? So it's that same chart from 2 years ago. And so if you look at this, and now everybody's comparing 2021 to 2025, I've done the same. You can see the double tops. You can see the double tops. You can see the yellow channels and stuff. But then you start saying, okay, well, now we try and understand why the price did what it did, right? So, for example, what happened over here was, so this is 2022 to, let's say, 2023. This is a bear market everywhere, right? Oh. Not just crypto. This was a bear market for stocks. Everything was in a bear market in 2022, right? So you can say, well, if we don't get a bear market, then why would we need to go down there?
Sure.
Right. So that's one. That's,
to your point, last month we didn't make a new monthly low either.
Right. Correct. By peanuts, right? Or by $1,000 or something. You're right. And so the question then is, yes, we could go down here if the markets are going to enter bear markets, and not just crypto, but everything, And you could say, well, that's possible. Sure, it's possible. But if we discount the possibility that stocks go into a bear market, it's unlikely that Bitcoin goes into the space here. So that's point number one, right? But also, I think, and this goes back to what Ben Bags, what you just said, right? Which was, shit, I can't remember what you just said.
Well, if everything else is going to go up, I mean, I'm basically saying if there's not a bear market, right?
Right.
Why would crypto fall in a bear market? It's got to be risk on.
Right, and then one of you also said something about, well, the skeptic or the cynic in you thinks that they want to collect more coins. This is like it's just an accumulation period that's lasting a little bit longer.
More sats.
Right. Now, here's what I think, right? And that is, I don't think there's a lot of utility in Bitcoin. And so in order to understand where the market is going, you've got to look at Ethereum. You've got to look at Ethereum. And the reason why you've got to look at Ethereum is because Ethereum will underpin all of what you just said, Ben, which is the digitalization of finance, right? Or the tokenization of assets and all of this stuff and everything going on the blockchain. That's not going to be done on That's not going to be done on Bitcoin, is it? So if you're thinking about technology rails, then you've got to start thinking about, well, what's the technology rail within crypto that's going to support that? And it's not Bitcoin, it's Ethereum. And you could argue maybe there's other coins, or maybe there's Solana, and maybe there's something else. But if you think that it's Ethereum, then you say, well, then let's look at the Ethereum chart. Now, I know, Ben, you look at, for example, Bitcoin dominance.
Yep.
Right. Other people look at stable coins in circulation or held or whatever. Right. Other people look at on-chain metrics and stuff. But I've always looked at the Ethereum Bitcoin chart. Right. And I'm not suggesting one is better than the other. I'm just saying it's just a different way of looking at how the overall market is doing. Right.
Yeah, I use the ETH Bitcoin comparison chart quite often too. But
okay.
a lot of times the dominance shows that. Shows that dichotomy a little bit more because you're throwing all altcoins in that pool, right?
Right. Okay.
I understand.
So,
yeah.
So I'm gonna focus on. Let's focus on Ethereum, and I'll explain where we are right now, and another reason why I wanted to be on the call today. Right. So another one of these mystery forecast things, right? So let's take a look at the Ethereum monthly, and I've even given it your name, Bags. Look, Ethereum monthly 6 Bags,
baby. 3 months tight down there, Nick.
Yeah.
Right. Yeah. So hold your horses. This is the chart for Ethereum right now. Let me just zoom in a little bit, and we'll talk about bear markets here. Right. Let me just hide marks and bars now. So important thing to notice is. Let me just get this. Hold on, just give me 1 second. I get my little pen over here, right? So this was the previous high that you had in 2021, right? 2021, this is the market high. This is the highs that you had in Ethereum at 4,800 or something like that. Since then, Ethereum has gone sideways, right? Just like it did over here. So what you have is, for me, this is the bear market in Ethereum, just like this was the bear market in Ethereum the last time, and this was the bear market the time before. It doesn't make sense for me for Ethereum to break down in this way, because if it did, it would negate what's happened since it was born in 2000 and whatever it was, 2016. And you end up with you end up with something that's new and different. You understand where I'm getting at?
Yes.
So either something bad is going to happen to Ethereum, in which what happens in the next 2 months is different to what's happened since 2016, or this is just another accumulation period which lasted a little bit longer than the last one. And each one has lasted longer each time. And if you think that what's to come with tokenization of finance and assets and everything else is going to be the next big thing in finance, it would make sense that the accumulation period is as long as it was. Right?
Yes.
And so if you look at, hold on, just let me get this back. Just 1 second. Let me undo all of these scribbles. So then if you look at how price has actually moved inside each of these spaces, it's also identical. Right? And this is why I wanted to be on the call now, because we're at this space where it is like, if my theory plays out, this is where it begins. This is where it begins this week. Actually, it begins today and tomorrow.
Spicy. Love it.
Right now, and I'll give you, and I'll explain why in a second, right? And so what comes next? If this plays out, this is what comes next, right? We move to the top of this yellow bowl, we break out, we get to 7,500 where it rejects, and it comes all the way back to 4,600. That's going to be the round trip equivalent for crypto that we talked about on the Qs. Ethereum moves from 3,000 to 7.5 and then back to 4.6. That's the round trip that we get in Q2. And it's going to be identical to what it did over here in 2021. It breaks out, it rejects the same trend line which connects the previous highs, rejects the same trend line which rejects the previous highs. It comes down, and then the mother of all run begins. So this is my forecast for Ethereum. It goes from 3,000 to 7,500, back to 4.6, and then it arrives at 21,000 in the middle of 27.
2027 is when it starts to go on its monster run.
No, that's when it ends. That's it, and then it consolidates there. So basically, it's going to go from 3 to 21, so 7x in the next 15 months. But along the way, it's going to have a correction in the summer, just like what we talked about with the rest of the stocks.
Sure. Okay.
Okay. Now, so far so good, right? So what I want to do is because we're so close to that boundary. Let me just zoom in a little bit. I mean, we're literally wicked off it. Right. So clearly, it makes sense to look at this area in detail under a shorter time frame. Right. So what I did, I pulled up another. So this is on my holidays, my day off. I just made a Ethereum 1 hour chart. You know, yeah, exactly. I mean, I don't know why. I must have been really bored, right? Let me just, and I want to show you like the crazy fractals in this. Just 1 second, right? Okay, now this is the 1 hour chart for Ethereum showing the breakout when the call began. Fucking hell, see that? I told you I wanted to be on the call today, right? I even have this estimate for when Ethereum would break out. So over the last, so this is when does this wedge begin? On the 7th of Jan. This horrendous price action is a falling wedge. This horrendous price action is a falling wedge. I even had the highs at 3,005. It rejects 3,005 and it backtests the breakout in time for what's going to happen with Fed. So let me explain what I think is going to happen next with Ethereum in like for the next 48 hours.
Hold the call. I need to load the boat.
48 hours, right? So the next 48 hours could, if it plays out, this is how it could play out, right? So first of all, that yellow bull support at 3,050 is there. So that's the February pivot that I showed on the other chart. So I want to be above there in February, right? That holds that yellow space that we just saw in the monthly chart. But what's interesting is that, and this is really just to show you how organized the markets are. Right? So I don't do this. I don't normally do a 1 hour time frame, right? But I just want to show you how organized these markets are, right? So if you notice, I've got this box here which says 1x. I've got a box here which says -1x, and then I've got a large blue box which says 2x. So an idea that I had a few days ago was it's possible that Ethereum has this move up inside this one box, like 1x move. It retraces all of it, and then it does a 2x. That's that blue box, right? So that's just the detail behind the wedge and in the background, right? And I did as an experiment. Now, the reason why I wanted to try that was to understand whether what happened over the last 24 hours wasn't random and was in fact a 2x fractal of exactly the same area on the left of the chart. Right? Making sense, right?
Yeah.
So again, it's really just for research purposes, honestly, right? For me to understand price action and algos and stuff, right? And it did, right? So you've got this extremely horrible price action inside this area here. Price breaks out of the wedge. It's as messy as it was last time, except it's magnified by 2. We go up to the center line of this green area here where it stalls. That sets up the back test. And over here also you see these very horrible candles with a long wicks back to this area here. So if this plays out, and again, there's no guarantee that it does, but it'd be nice if it does. It'd make me feel good. I'll make some money out of it too, obviously, right? I'll make some money out of it. Good money out of this, right? So with any luck, what it does from here is it goes to, so this trend line here that I'm moving around connects the beginning of this corrected move, ends at 3,120, right? So this is where I'm looking for price to go and consolidate next, and then move all the way into this orange space up to here around 3,000, right? But anyway, long story short, I'm looking for it to go much higher, right? So
long story short, we're not bullish enough.
You're not bullish enough, and if anything, this tells me that the Fed reaction is going to be positive. Right? So this is where you start off with a chart and you factor in what's going on, in what the context is. Well, we've got a Fed announcement tomorrow, right?
Yep.
For this to play out, then the reaction needs to be positive from the Fed. Whether that means they cut or they don't cut, I don't care. I don't fucking care, right? Yeah. I don't pay a mortgage in the US, so it doesn't matter, but I'm joking. Of course I care. I want all you old guys to have low mortgages and stuff. But the point being that for this to have a positive reaction, you expect that there's going to be a rate cut. But I don't know. But I want to see this go from 3,000 all the way to 3,300 before the end of the week, or around, let's say, into the weekly close. It's 10%. But then when you think about what I just shared with you on the monthly chart, it would make sense that price begins to accelerate. Otherwise, it won't hold that yellow space on the monthly chart. And given that it coincides with a wedge breakout, it makes me even more, I want to go shopping.
Yeah.
I want to buy some stuff, right? I mean, again, so what's the safety net here? The safety net is it falls back inside the wedge and it goes down to shit. It goes down to 0. It goes down to 2.6 by the end of the month. So this is the monthly close. January close is marked over here, right? So obviously I'm looking for this positive outcome. I'm looking for price to hold this breakout and go up towards 3,300. If we fall back inside the gray space, which has been basically we've got to hold 2,900. So if you go back below 2,900, so I mean the good thing about this is that your stop can be very close by. The failed breakout here, so we're talking about failed moves before, right? So if we did get price going back below 2,900, it could signal a failed breakout, which nobody wants to see.
Right.
And maybe, and so there's one of two things that could happen there. One, I haven't counted the zigs and the zags, and then maybe there was one more somewhere along the way that I haven't counted properly, or it's a failed breakout and crypto goes down the shitter. Right. So my base case is, and we're going back to what you said before about having a base case and having different outcomes, right? My base case is that crypto holds on here, and it holds on in the nick of time into the monthly close, which makes sense. We're talking about what GP said earlier with calendar changes and stuff. It makes perfect sense that whatever happens next happens into the monthly close. February and March are strong as fuck. April, May, and June are weak as hell. And then the second half of the year, we ride off into the sunset. All markets.
God,
can I just show
romantic?
Just one or two charts, and I'm not going to waffle too long. I'll just share 1, 2. Right? I just want to recap. I just want to go over what we talked about last time I was here. I'm not going to go through the chart. I'm just going to tell you what I said and where we are. This is the XBI chart we looked at 3 months ago. It's playing out. Right. So again, I'm not going to go into detail, but this is what we looked at: the round trip, which was the possibility here. So we're consolidating around 130. Makes sense. It's got to take out 130. And with QQQ breaking that wedge this week, next week, then this is the same, let's say, crossroads. This is the same station here. It's the same as the QQQ 630 area. Right? We take that out and we're off to the races, right? So there's that on XBI, and then IWM, which was the other one I shared with you, monthly. Again, and to show you that it played out, it continues to play out. So this is the other chart that I shared with you last time I was here. And notice this again, Lower monthly low, 9 MA. 9 MA holds and it continues to go higher. All right, so a few different things I shared with you on the call today, including insights into how to predict where prices are going to go based on candle lows, right? Very, very useful.
You're too good to us, Cookie. You're just too good to us.
No, man, you guys deserve it. You guys are killing it.
We appreciate you, man.
I listen to some of your calls, and I'm like, these guys are like angels.
Well, sometimes we have a little devil on our shoulder, you know.
What's it? You give away so much stuff, good stuff. So I thought I've got to give a little bit.
Cookie, last thing. I know Nick had a question too, but
no,
just a quick take on Tesla.
Okay, let's pull up the chart.
Let's not spend a lot of time on it. Just quick.
Yeah. Okay. Let me pull up my chart. Right. I'll pull up. Let's go into the 4 hour time.
Because I couldn't wait for 500. I sold some.
Okay. So Tesla's moving the same as it did back in August of last year. Right. It's doing the same thing. It's doing the same shit. Right. So same patterns. Right. So you've got this uptrend channel. Right. And you got. I mean, basically, it's you want to see it hold 430. Right, so if it holds around this area, you want to. I would say you want to see it get back above the 4 hour 200 MA, which is 434, and you'll feel better. If it does that, then you start feeling better. But one thing to notice here, and it's done the same, right? This is why I ended up being patient with Teslas, because these bunny hops is in its DNA. This is what it does. It goes up for a week, it goes down for a week, it goes up for a few days, it goes down for 4 days, it goes up for 5 days, it goes down for 6, it goes up, and it does that over and over and over again. And you know the story; it's all about options and stuff, right? Yep. All about the calls and the puts and shit, right? So that's why you get the same again. It goes up for 3 days, it goes down for 2 days, it goes up for 3 days, it goes down for 2 days. But with any luck, it does begin to follow. And I'll just move this around so it fits better. No, I'm joking. I'll put it back. But I'm just saying, I'm looking for it to follow directionally this curve. I'm looking for it to directionally follow this curve. So even last time over here, you got the same bunny hops all along, but it held that 4 hour 200 MA and it started curling higher, right? And again, what I think you're seeing is, well, A, they've got earnings coming up soon. They haven't reported yet. And B, you've got FOMC tomorrow. Right, you saw what crypto just did, the back test, and so this price action here doesn't surprise me in the slightest. It's like what I would expect from Tesla, of all things, to do in the days before earnings and days before FOMC, and with QQQ at the edge of that wedge, I think everything is poised to move. Whether it's crypto, whether it's
would you rather be buying Tesla or semiconductors or Ethereum here?
Oh, I'd buy semiconductors. Because I'm like you, Ben. I'm in love with semiconductors. I think it's one of the strongest sectors. It tends to lead. There's less headache there. And so here's the thing: it's not about the price target, but it's about how we're going to get there.
I like hitting the easy button when at all possible.
Exactly. So, I mean, if you're going to make 30% on Soxel versus 30% on Tesla will drag you around the fucking houses. Soxel won't do that, or not as bad, or Micron won't do that. Right. So it's not about how much money you make, but it's how easy it is to make it. And I don't know if I'm getting old. But I don't know. I mean. And that's why I'm like, 10x leverage on TQQQ sometimes. My charts are like fire for the market. So why not just do 10x on those?
Yep.
Versus trying to pick stocks which are going up and down and backwards and round and round. Right? I make more money, I sleep better, and I don't know. All round a happier person. What can I say?
Cookie, I love it, man. I feel like every time you come on, every quarter that we bring you on, it's like a reinvigoration for me. And I tell people this all the time. I didn't have the avatar of the Swedish chef just randomly, right? I'm a cookie disciple at the end of the day, and we all do things differently. We all see things differently. but just having an hour with you once a quarter is just like fresh electrolytes in my veins to get me through another quarter.
Yeah. And apologies for all the swearing and cursing on the call today. I don't normally do that. I lost it. I lost it today, but
no. GP, Nick, Cookie, last words, anything to throw out at Cookie other than our great appreciation for him?
Yeah, no, it was awesome. Thank you.
Hey, you're very welcome. And sorry I didn't leave you guys to get a word in today. I don't know. I always feel guilty afterwards thinking I don't let you guys talk enough.
No, man, we do this twice a week, every week, and to get different perspective on the show is always great. So, no, you're not taken away from us. We don't get enough time with you. So
Okay.
just having you on for an hour a quarter, it's like we got to get that cookie download all in our mental. Nick was breaking on the "you're not bullish enough," right? And here this whole time I've been shouting it for the last quarter, and here we are. We're able to get bulled back up again. So I love it.
Hey, can I share one chart?
Yeah.
This is a tip, right? So Bitmine is an absolute dog of a stock, like Coinbase is. They're all shit. Coinbase,
the garbage behavior until they're not.
They're really tough holes, right? They're like a nightmare, very difficult holes. But if my Ethereum idea plays out, then
Bitmine's going to go fucking ape shit.
Check this out. Take a screenshot of this, all you kids at home. Check this out. You seeing it?
200.
I screenshotted it.
Right, so we've got, this is the end of the bullshit cycle, which began in July of 2025. It has the same duration as the bullshit cycle that began in 2024. You are here. We are going there. Right? Hopefully, right? I mean, I don't know if it'll get the same explosive move, right? But to the top of the channel is 100 from 28. Right? Now, for those of you who have like weak stomachs and stuff, and you don't like taking undue risk, which is fair on shit like this, and crypto in general has been an absolute turd, buy it once it takes out the 50-day moving average. But if you're brave like the rest of us, or you want to have a bit of a punt, then as long as it holds 26, hopefully it holds 28. Hopefully it holds 28, and then it just moons, and it doesn't stop mooning until it gets to like 80. Right, so I'm holding the BMNU, which is like even more of a disaster, like 2 eggs. Because I love the pain, right? But I'm good because I always get out of the way. I'm very good with exits. So 2026 was the year that we have better exits. That's what I said to the group. We've got to exit better, right? So
I love that.
When things aren't working out, we get out of the way.
I love that, Cookie. I think I've said this countless times over the years. Selling is the hardest part, and whether it's your ego or your P&L or your disbelief, whatever it might be, just selling is the hardest part. It's easy to buy things when you've got cash, right? It's just easy to throw money at stuff, but selling them and capturing that profit or limiting that loss is everything.
Right. You can't call yourself a trader if you don't sell, if you don't close. You can't. You're just a hodler.
100%.
Anyway.
All right. That's going to do it for this quarterly cookie call. It's good to have a Tuesday show on a Tuesday, but we appreciate everyone for showing up. Don't forget, we have our StockTwits Community Rip Live show every Wednesday, 1 p.m. So 1 p.m. Eastern time. We will be there with bells on. Cannot wait to see what happens on Fed Day, as usual. We'll probably have Jay Powell on toward the end of the show, as we always do. Can't wait to talk to old Jerome. But other than that, Cookie, always appreciate you, my brother. We're so glad to call you a friend. So glad that you're able to join us when you can and give us your time. And
man.
Just can't thank you enough.
Love you, gang. Take care.
Thanks, chat. Thanks for everybody for showing up. See you tomorrow.